Hey, what's up guys? Welcome back to the channel. Everybody likes a bargain, and stocks with low share prices definitely seem like bargains. With some high price stocks that could cost hundreds or even thousands of dollars for one single share, buying a penny stock, which is essentially buying a stock that costs less than $1, can definitely seem like a bargain. And penny stocks can be a tempting way to grow your money relatively quickly. It is possible to achieve strong returns by investing in young companies that have a small valuation or depressed stock prices. I believe any risky stock investment should be limited to shares of companies that generate meaningful revenues or are at least pursuing clear and realistic path to growth. There is a difference between hype companies that have no real underlying business, and there are those companies that are legitimately trying to grow their business and business model and are just going through the infancy stage, or have faced turmoil in the past and are now pivoting towards a better future. In this video, I'm going to cover one stock that's been hit by hard times, but is on a path towards long-term growth potential. Is now the right time to get in on this bargain stock that trades for less than $1? Now, depending on who you follow and what you read, you'll either hear penny stocks are just bad and stay away from them at all costs, or penny stocks are great and you should ride that rocket ship to profits in the millions or thousands of dollars. Like with all things that have both ends of an extreme, there is a happy medium. Right off the bat, not all penny stocks are worth it. And then there are those that are worth a closer look if there is a legitimate business model with clear paths to growth. Having said that, yes, it is possible to make money off penny stocks, assuming you find the right ones that make sense for your portfolio. Then again, it's technically possible to make money off of any stock or any ETF. If you want to be a successful investor, then you need to focus on the potential for your stock pick, regardless of price, to gain value over the long term. This is why we invest, to buy assets that will be worth more tomorrow than they are today. And there are plenty of good reasons to invest in small companies. Investors who buy shares of fast-growing companies that are still small can capture a lot more upside as the share price moves up, compared to those who wait until those small companies have turned into giants before they invest. Let's look at the potential opportunity with Chalice Brands. Chalice Brands is a multi-state operator in the cannabis space. They are focused on building a leading brand presence on the West Coast in the United States. Their experience in retail, marketing, and craft cultivation, supported by fully integrated processing and distribution. One thing I want investors to keep in mind no matter what stock you're investing in. As an investor, you're not just buying a ticker symbol, you're a partial owner of the business you choose to invest in. When you buy a share, that gives you ownership rights in a business. The opportunity at hand with Chalice Brands is a business that is adjusted EBITDA positive, potentially undervalued, presence and operations in key markets of Oregon and California, and has a combined workforce of over 250 employees. This is a real business with employees that are working for you as the investor. So what else are you investing in with this business? You get a combined retail portfolio of 16 locations in Oregon representing 5% market share, and significant market share in 3 key Oregon metro areas such as Portland with 8 locations, Salem with 3 locations, and Eugene/Springfield with 2 key locations. There's also a statewide wholesale distribution covering every corner of Oregon with distribution to over 350 dispensaries in 2021. The company has chosen a crawl, walk, run approach. That means that before you can get to growth opportunities with higher profit margins, you need to learn how to crawl, walk, and then run. In this case, crawling can represent outsourced manufacturing, distribution, and sales. Walking would be insourcing sales, while distribution remains outsourced. Run, now you're talking about a vertically integrated business operations that includes retail, distribution, processing, and a cultivation network. Now you're ready to grow those margins and opportunities. By taking this approach, this allows you to validate your business and operations and really ask yourself, does the business model make sense? Then you invest in acceleration. Once you figure that out, all the pieces are in place. You naturally learn to optimize your business for future growth and profit margins. Now, as you're assessing this business, you might be wondering, well, why Oregon? It was the first state to decriminalize small amounts of marijuana. In 1988, Oregon legalized medical marijuana along with Washington, Arizona, and Nevada. It's the #1 state in terms of cannabis retail stores per capita. Or in other words, 16.5 dispensaries per 100,000 residents. It's a billion-dollar market. In fact, it's the 3rd largest market in per capita consumption, with $275 annual cannabis spend per capita. It also happens to be in an optimal climate for growth operations. That's an overview of the business and the market. Let's take a deeper look at the financials. In Q4, they recorded $8.9 million worth of revenue. That's a 61% year-over-year increase just compared to a year ago. Gross profit margin before the fair value adjustment came in at 41% compared to 30% a year ago. Annual revenues totaled $29.3 million in fiscal year 2021, compared to just $21.9 million in the year 2020. So in summary, growth in top-line revenues and a growing and very healthy profit margin. And that's what I meant earlier in the video. You can't just invest in any old penny stock. You have to assess, is there a potential growth opportunity? You have to look at the financials, the business, the market. Is there a case for potential growth? Now we take a look at this business, the growth model, the market, and the financials. Not bad considering the stock is trading around 60 cents a share. As an investor looking to invest your hard-earned money, this is the type of growth potential you want to consider before you invest. Because remember, you're not just investing in a ticker symbol, you're investing in a business. Do you want to be a partial owner of a business? You don't want to just buy any old penny stock that you may have heard from rumors. You want to invest in a growing business with growth potential. Now, as I was researching this company for the purpose of this video, here's what I came across. They're looking to continue to improve their homegrown integration. They've made changes to their product mix, store merge, marketing, etc. And the changes that they have made are going to have a significant impact on growth, not just in 2022, but for the years to come. And to me, it makes complete sense why they've chosen this crawl, walk, and run strategy. And if you look at the stock price so far year to date in 2022, the stock is up over 50%. So you can see this stock seems to be on the right track. As I mentioned earlier in the video, sometimes a penny stock is just a company that is going through a period of challenges. And that story really hits home for Chalice brands. When they initially IPO'd, the stock was trading around $25 a share. And the entire cannabis industry, not just Chalice brands, has faced a lot of challenges after the hype sort of settled down. There's a reason why this stock is depressed, because that initial hype went away. And in 2019, new leadership joined the company to improve business fundamentals with transparency and discipline. And in 2021, they have accomplished their strategic objectives and are repositioning themselves for long-term growth and success. Now, there is some level of uncertainty when it comes to key pieces of legislation around this cannabis space, especially in the US for multi-state operators. But there is hope that change is on the way, and it could be a key potential catalyst for this sector in general. And I think the stock price as it trades today is a reflection of both the challenges and long-term growth potential. No doubt the company has faced challenges in the past, but since then they've been able to recapitalize their balance sheet. They've also changed their corporate name, expanded their retail footprint, and have added a next-generation e-commerce tool. All these items put together and more will truly bode well for the road ahead. Looking at some of the key accomplishments, the company closed on its purchase of a majority ownership in Fifth and Root, which is a nationally recognized CBD skincare brand based in California. And this adds to a national distribution platform for Chalice brands. The company also purchased a 100% ownership of Homegrown Oregon, which is a chain of 5 profitable retail dispensaries located in Portland, Salem, and Albany. In December, they completed an agreement to lease a new property in Portland, which will house their new state-of-the-art flagship superstore. The store is expected to enhance the company's brand portfolio while showcasing the key partners they work with. The store is expected to become operational at the start of H2 2022. They have expanded their retail properties from 7 stores to 17 stores. That's a 140% increase in their footprint in the industry. The company wrapped up 2021 with sufficient cash on hand to support its growth opportunities. Looking at 2022 and beyond, strategic acquisitions will still be a key focus. They will continue to expand the brand's portfolio. Combined with the launch of their flagship superstore, will position the company for long-term growth ahead. And if you take a look at the cannabis market in general, this market is expected to grow to $96 billion by 2026. According to a recent research report, this market was worth around $10 billion in 2018 and is expected to grow at a 33% CAGR by 2026. Rising demand for cannabis-infused candies, chocolate, beverages, that's what's really driving the demand in this sector. Product innovation and strategic packaging is also going to play a key role on how this market evolves in the upcoming periods. As of right now, the global cannabis market is highly competitive and very, very dynamic. Key players in this market are trying to expand by forming new partnerships and expanding their product portfolio. And as you've seen throughout this video, Chalice Brands is taking a similar approach for long-term growth. Now, I want to highlight that investing in companies that have lost most of their market value and are depressed does come with risk. Penny stock companies are tiny compared to most publicly traded companies that are large businesses that have already proven their value. No doubt, Chalice Brands has room for growth, but they will have to continue to demonstrate key drivers to success. Most new investors and beginner investors make the mistake of investing their money in whatever is the latest hot industry. You know, the one that is often talked about in the news. Maybe your Uber driver mentions it, or maybe you get a call from your grandma asking what names to buy in this space. The latest hot fad. The problem with this approach is that by the time you hear about what industry is hot, That typically means it's already on everyone's radar. The trade is already overcrowded, matured, and overpriced. And that's exactly how the cannabis industry played out. There was a ton of hype around the space, which has now mostly disappeared. That's not a bad thing, because now companies and investors can focus on the true underlying business and the real growth opportunities. If you're thinking about investing into the space or any other industry for that matter, think of yourself as an owner, as you're buying into a business with actual operations and actual employees. There will always be a risk and reward relationship when it comes to investing. So make sure you do your own due diligence, your own research to see what makes the sense for you and your money. That's it for now. Thank you for watching. Make sure to check out all the links in the description below, and I'll talk to you in the comments section.